Hello and welcome to the look ahead for Tuesday, the 10th of June with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow, the economic calendar across the board is relatively quiet. A key focus is going to be UK jobs data. Now we're expecting to see unemployment levels tick higher to 4.6%, up from 4.5% previously. And that comes following an increase from 4.4% in the month prior to that. So we are seeing an ongoing increase in unemployment. Wage growth is expected to hold steady around that 5.5% level. Now, it's interesting because this sort of comes out as we're seeing the shakeout, if you like, from the April increase, payroll tax increase, the increase in burden on tax for national insurance contributions on the employer, as well as the increase in the minimum wage. So we're seeing that as there's that increased burden, companies are starting to release staff, which would explain the increase in unemployment. Wage growth, though, is still staying sticky. And this is something that the Bank of England has highlighted as an obstacle to cutting interest rates more aggressively. 5.5% wage growth is not coherent with a 2% increase in inflation. So it's intrinsically linked, wage growth is intrinsically linked to service sector inflation. So when we see strong wage growth, it means that service sector inflation, which is still sticky above the 5% level, will likely remain sticky. So that's why the Bank of England would want to see wage growth cool, come down before it considers a more aggressive approach to cutting interest rates. Now, this is the pound US dollar. We can see that it's trading near multi-year highs above the 135 level, just down from that 136 high that we saw at the end of last week on Thursday. So now if we get stronger than expected data, including particularly wage growth, then I think that could see the pound push higher amid expectations that the Bank of England is going to have to be even more cautious about cutting interest rates. Let's not forget that we heard from Bank of England Governor Andrew Bailey just last week, who said that the Bank of England would only cut interest rates gradually and carefully, really highlighting the cautious approach that the central bank has taken. Now, that cautious approach is keeping the pound elevated. However, if we do get so if we get stronger than expected data, a rise above that 136, that's what the pound's looking for in order to extend that move in this rising channel towards this 137.50 level, which was a high seen from 2022. Now, if we see weaker than expected data, that could really raise concerns over the outlook for the UK jobs market, particularly if we see unemployment tick higher than expected. I think that could unnerve investors a little bit. And that would have a negative impact, we would expect, on the pound US dollar. Levels we're watching on the downside, this one here, 134.40, that was the high that we saw back in September. That could offer some support. It's also the 100 SMA. And then if you keep sort of going below there, then 133 on the downside would be a level to watch. Now, I'm also just going to bring up the FTSE 100. FTSE 100 has had a pretty phenomenal run. So we've seen the UK index rise for 4 straight weeks, putting it on its strongest weekly run so far this year. Also outperforming using this metric its international peers and in the Europe and the US, as well as the Magnificent Seven. So this is a pretty solid performance from the FTSE. Now, it's been defense stocks which have been strong, doing a lot of the heavy lifting for the FTSE, and that's following Prime Minister Keir Starmer's increase in defense spending, following his defence plan strategic review. Expect to see a £68 billion increase in military spend. So that's helping stocks such as Babcock, BAE Systems, Rolls-Royce. They've all been part of these push higher. And then we've also seen precious metal miners have also been a boost to this level, thinking of Fresnillo here. So those have been driving the FTSE. It's been guided higher by the 100 SMA. We can see there rising towards, pushed above the 8800 level, looking towards 8910. That was the previous all-time high. Above here will be blue skies and fresh record levels as it looks towards 9,000. I think the one thing to keep in mind, the FTSE is undervalued compared to its European and its US peers. There is a potential to see some upside, but remember that the FTSE does really lack exposure to AI stocks and to technology, which could find it limits the upside. Just on the downside, key level of support is that 8,800 level. Below that, then we'll be looking around the 8,650. So I hope that you've liked everything that you've seen today. And if you do, then please do give this video a like. And for more videos like it, then please do subscribe.